sell in May and stay away. Isn't that how it goes?
That is,
Stay away for how long?
normally it's the summer. People stop trading, and then normally you get, the Santa rally up towards Christmas, obviously.
Okay, so it's all the way from May until Christmas, so we just got to sit tight.
Maybe not, Christmas, but maybe start coming back in October. I think there's the Halloween effect as well, isn't there?
Ooh, spooky.
Yeah.
And what happens then?
We'll talk about that then.
Okay. Well, how are we right now? It is the, 6th, 7th of July, and the markets are not looking great.
No, I mean, we've had a really strong rally in the markets, particularly tech stocks, and that's what we predicted a couple of months ago, and it absolutely played out. And yeah, I hope that anyone listening to this managed to take advantage of the tips we gave and has benefited from that. I know I have. Yeah, and the tech stocks has been really good. Today, as we do this, we've had quite a pullback in the markets, and which is a bit annoying because what we do is that strategy of dollar cost averaging, which is buying a bit every month of something, various stocks, bonds, whatever, and just averaging into the market, but particularly where we see the most value at any given point in time. And then, like today's been a really, really down day.
It's been largely pulled down by crypto, which has had another one of those flash crash type days. I would hope that in the next day or so, we recover completely and start pushing up some new local highs.
Yeah, exactly. It's a bit annoying when it's like the next day the market crashes, but it's always, you've got to remember, taking the big view, looking at the big picture, and just investing a little bit regularly is what really matters. I mean, even if you're at the top of the market, markets are at all-time highs, and actually the NASDAQ but it doesn't matter for enough time, say a 30-year investment period. Doesn't matter, if you're investing at the peaks of the market, you'll do really well.
That really is a mentality. And if you look at, someone showed me a list of billionaires, and there's one in the top 10, there's one billionaire investor, and there's not a single billionaire trader. Long-term views are what matter.
Do you know who that investor is?
I'm going to assume it's Mr. WB.
That would be Warren Buffett. Yes, I would assume it's him as well.
Okay, so give me a rundown on your month.
What I've been buying and selling?
Yeah.
Okay, let me just take a quick look at my notes. So I sold two things. Smiths, that do the airport scanners, made about 10% on that. And then also Tesco's, which is British supermarket, which they also are in other countries, but I'm not sure which other countries.
Yeah, you're a month or two behind me on Smiths, if you remember.
Yeah, because I probably missed you must have mentioned it on the podcast a few months ago, I assume, and I didn't really take notice.
I did. The problem here is, I think, when we're looking at charts and adjusting for dividends.
Yeah.
The question is,
I wasn't adjusting for dividends, and I've now taken that into my whole chart analysis.
So we both do, in our chart analysis, adjust for dividends.
Yeah.
And we were agreed on that.
So anyway, that was two. I took about 10% on both of those. And then I have got my buy list, which I haven't completed buying. So actually, I'm not too annoyed about the market crashing today, because that means I can pick up some of these other ones that I wanted to buy. But just to run through it really quickly, Sangamo, Lumen, Hudson Pacific Properties, Ceres, VFC Core, Origin, Verizon, Ocado, 3M, SDIV, the ETF, which is the super dividend ETF, TUI, that's TUI, holiday company, Travis Perkins I also bought because I was watching something with the CEO, and then I looked at the chart and I thought, actually, that looks pretty good. So that was a last minute thing. And then also PGRE, which is Paramount Group, not Paramount, the film and TV company, Paramount, the real estate investment trust.
Wow, what a contrast to the last few months we had, where they've been relatively quiet. But I know at the end of last month we were saying that it looked like this month was shaping up to be busy. And, well, look at that. What's that, 15 stocks? Something like that.
Yeah.
Spot on.
And I just want to point out that two of them are real estate investment trusts.
Mm.
Okay, and I'm going to come back to that after you've told me your list.
Okay, well, I want to give you a list, but you know what? I've got my list here and I actually crossed everything off as I bought them. So you have to excuse me while I try and decode what I crossed out here. So yeah, Verizon, I can't even read that one. Origin, VFC, same as you there. Realty Trust, BXP, Bonado, Ceres, Sangamo, same as you there. Really liking Sangamo, moving well since we bought it.
You're good.
Is this? I think this is Dish, Tal Education, Lumen, and Hillian.
Hillian?
Yeah, it's power chains for electric vehicles, which I think are going to make a big comeback.
You've been into your electric vehicles for a while.
I am as electric vehicles, and I think it's a bit like the weed stocks. They're really very oversold. Hopefully they're bottomed out now. We'll look for a good rally. Well, as you say, towards Christmas. I did buy some crypto as well. I bought a little bit of doggy coin, ouch, but twice as much XRP.
Twice as much XRP.
I double buy on XRP this month.
Wow.
Today, including on that flash crash.
I mean, that is the thing. We could have this judge's decision any day, literally any day. And assuming it's a good result, you would expect the price to really rocket. I say any day. There's also many scenarios where this gets dragged out for another couple of years.
Ed, can I just ask you, like, so what did you, in the last few weeks, since our last podcast, have you come across any really interesting articles, charts, whatever that you think would be good to share?
Yeah, well, there's two things. One thing I've been meaning to talk about for the last couple of months, and I promised I would talk about it this month in July. So, yeah, I'm going to talk about it. And there's another article I also read that I think plays into this. So, my big bit of advice, and this is something like everyone feels that stocks have been declining for a long time, and they have broadly. Everyone is waiting for the Fed and other governments to start cutting rates. They've been increasing interest rates.
Mm-hmm.
Everyone thinks, so we've had a pause as well in America. Everyone thinks as soon as they start cutting rates again, the stock market is going to rally. I hear this everywhere. It's just like common knowledge. It's just so expected. And I don't know where that has come from. Because anyone who has done any basic research, look at a chart, look where that's happened in history, and it's the moment that the Fed starts cutting rates, that is when a recession starts. I mean, I'm looking at 1969, 1973, 1981, 2000, 2007, 2019, and now 2023, and possibly 2024, right? And it's at the moment that the Fed pivots. We've seen, the recessions go from, just going over those again, it's those dates, it's minus 36%, minus 48%, minus 27%, minus 51%, minus 58%, minus 35%. So literally, when the Fed says they're starting to cut rates, it really is a time to look at your portfolio and think, okay, what is a bit overheated? What can I cut? I'm not saying close everything, get out of the market, because I believe in just averaging in, staying in for the long term. But definitely, if some things have made good profits for you, I would take some profits. I think that's what I'm trying to say. Just, it's a really good time to start thinking about taking some off the table. That is making nice gains.
That's really scary. And it makes me think, okay, so what? Like, we're in big trouble and we need to wait till Christmas just to probably come close to breaking even on some of our losses and get out of the market. It's absolute killer state of things right now. So many stocks are beaten down hard. And you say it's going to get worse.
I'm saying the data suggests it will. And that, you were talking about articles, how they're ranking articles, and then just the other day I was reading an article, it was an interview with the very famous investor Jeremy Grantham, and he was saying that we were already in this super bubble of stocks. And then suddenly we had this AI narrative comes along, ChatGPT, everyone's using AI, and that's reinflated the bubble. And he says there's maybe a couple of quarters left in it. So, possibly to the end of the year, this AI boom, speculation is going to keep pumping the markets. So actually, Santa Rally we're talking about, we may get the center rally, but early next year, that may be where he falls down the chimney and into the fire pit.
Ouch. We better get one hell of a rally.
So, because AI is here, but is it really going to have the effect that soon? I think it's going to, as Jeremy Grantham said, the super bubble is going to inflate again. And then when no one's expecting it, because everyone expects Fed rate cuts to be a good thing, actually it's not. That's when the super bubble will pop.
But does the super bubble pop? Yeah, you can lose value in housing and stock market, everything like that. But if it pumps crypto,
it could pump crypto. And there may be certain things that do pump. Yeah, Bitcoin may be one of those things. As it happens during COVID, initially Bitcoin and crypto crashed, but it was actually the trigger for the massive rise that you saw.
That's the thing. There's always a flea.
And what I think, and that's why this month in July, I have bought HPP, Hudson Pacific Properties, and I bought, as I said, Paramount Group, and some other REITs in my portfolio, which are real estate investment trusts. I think they are the type of investment that might do really well, because obviously at the moment they are getting crushed by interest rate hikes. But cuts would benefit companies that are invested in real estate.
Yeah. Well, as Warren Buffett says, I think it was him, there's always a bull market somewhere.
Yeah.
But I think most people think the last place that would be is in REITs. And actually, they look some of the most promising assets right now, which is weird.
And I mean, just taking on a personal level, I'm investing in real estate now, but I actually personally want to buy some real estate during a market crash. And in the UK right now, house prices have pulled back a little bit. I'm actually hoping they fall a lot further. Yeah, I can take advantage of that.
So again, that could be a prime example of a short-term bounce with a very big fall to come in a year or so.
Again, either way, it's just about taking advantage of low prices where you see value.
Okay. I've got a few things that I'd quite like to talk about that I found across the interwebs. The first being a little statistic here I found on the whole topic of cost of living crisis. Okay. So people now, the bank of mum and dad, 25% of adult children are being supported on their mortgage payments by their parents.
25%.
Yes.
Wow, that's huge.
1 in 4. I'm really surprised by that. And that's in the current state of things. Do you imagine how much worse it will get when a lot of these fixed term mortgages mature?
Exactly. What are we like? We're still 3 years away from some of these fixed rate mortgages that were 5 years at the start.
Well, yeah, look,
expiring, and then them suddenly being hit by these huge interest rate hikes.
Exactly. Currently, the interest rate rises are actually leading, this is really surprising, they're actually leading to further inflation. Okay, so 85% of mortgages are fixed term and haven't yet expired. So currently, it's the savings that are having the most impact on the economy. People are actually having a net gain right now.
Right, yeah. Even though, banks have actually been slow to pass on the interest rates.
Yeah, so, let's wait and see what happens when those terms do expire. Where will the rates be by then in, say, 6 months or so? It's also interesting to note, if we're talking about 6 months at a time frame, that according to the Federal Reserve, out of the 200 trillion pandemic savings that households saved in the US, I'm crossing a little bit between the UK and US, but in the US, there's only about probably less than 500 billion left, which
sounds like a lot still.
Start with 200 trillion, 500 billion left. But at the rate we're going, that will be exhausted in 6 months' time at year's end.
So everything that anyone had saved during the lockdown will have gone back to the state before.
At the same time that you say you estimate that markets will be at a peak.
Yeah, so stock market at a peak.
All savings depleted since lockdown.
Yeah. So that will stop retail investment going into the market.
Yeah. And probably energy bill, a lot of energy tariffs are going to be refreshed then again on a higher rate, all these kind of things.
So yeah, retail will have to pull their money out of the market, start paying some bills in the real world.
It could be absolute disaster. But this is what I was touching on earlier. It could also be a great thing for crypto. And it got me thinking the other day about this idea of a Prius moment, okay? So who makes the Prius? It's not Hyundai. Toyota Prius launched in 1997. Bitcoin launched in 2008. Tesla in 2020, making EVs mainstream, should take, on the Prius scale, 23 years. So we're only 14 years on the crypto journey. If Prius took 23 years to go mainstream.
So you're saying Prius started it, Tesla finished it?
Yeah, that's what I'm saying. Tesla made the Prius dream
A reality. Okay. And then maybe Bitcoin started the crypto reality, and some will say Bitcoin will finish it. Others will say maybe XRP will take over and finish it.
Well, whatever happens, if we're looking at that time frame of innovation, we're still really early.
We're so early. Yeah. In terms of innovation, speculation may have got ahead though.
Speculation always gets ahead.
There's still plenty of room for everyone who's investing in crypto. I really believe there's a long way to go, but the big money, the biggest gains are behind us.
Yeah. The other thing I want to touch on, which is going back just a little bit earlier before I went into the Prius thing, is again on mortgages. Right. Today, in July, we're at 6% interest rates. That doesn't sound as high as back in the 80s when it was apparently about 15%, right? And people say, well, why are you complaining? We've been through much worse and we got through it. But back then, houses were cheaper. It's much tougher when you factor inflation. House prices against salaries are still trading by so much. It's funny how time has that effect that distorts what people perceive as reality. What was lived in the 80s seemed tough. Looking at the percentage interest rates and saying, well, your interest rates that you paid on your mortgage are less than half what we paid. But that's just not true in terms of the way the salaries haven't grown in proportion.
No.
So there is potentially a much, much bigger disaster ahead.
Especially as you say that people are already leaning so heavily on the bank of mum and dad.
Can you tell me something that might be reassuring? That might say, no, there's no crash coming. We're going to be okay. This is the hard time now. Because it feels hard. I think everyone would say this feels hard and they've had to be extra careful over the last 6 months to a year at least. So is it going to get easier or is it really going to get worse for a lot longer?
To be honest, I do think some kind of crash is coming in the next couple of years, and it's going to be harsh. But I do think there is value, as you say earlier, there is a bull market somewhere all the time. So it's just about finding those hedge assets or whatever, find safety that are already a value. And I think, just going back to houses though, what I find the most frustrating thing, and I think everyone will find this, is that actually, I think it's going to be the smaller properties, the 1 and 2 bedroom houses and flats that actually maintain their value the most, which is, again, making it very difficult for first-time buyers. Because bank of mum and dad, as you say, they're living in quite big houses now, kids have left. Those houses, they're going to want to downsize. Everyone's going to want to downsize.
If they're having to support their kids as well, then they're going to
downsize.
Less cash.
Their kids are looking to buy somewhere small to get on the ladder. They're looking to downsize. People who have bought houses bigger than they can really afford, especially with interest rates going up, or maybe with a recession, losing jobs. For safety, you get a smaller house. So it's actually the bottom of the market that is going to hold its value the most, or even increase in value while the top of the market loses value. That's what I think.
Okay. Now, I don't know if it's just because I'm more aware, thinking about it. I'm seeing a lot more houses for sale at the moment. And also just walking down the street, I'm hearing neighbours saying, hey, I'm selling up, I'm downsizing.
Yeah, I was going to say, so what are you seeing for sale? Is it big houses or small houses or flats or houses with gardens or any,
Well, I know we're talking about the demand for small properties. Yeah. it's the bigger houses that I'm seeing for sale. So that is absolutely right. That's what I would expect.
So I think that's about all for today. We're both on eToro, so find us. I'm EdWhite1.
And I'm Lucas151.
Look at our portfolios, see what we're doing, leave us messages. We'll always try and get back to you. Until August. See you then.